All right, today we're going to talk about a financial story that sounds, well, completely made up. It's being called the infinite money glitch, and it's happening right now. To really get it, we have to start with a very, very simple question.
So just imagine you're at a garage sale. You see a perfectly good $1 bill sitting on a table. You ask how much, and the owner looks at you, straight-faced, and says, $2. You'd laugh, right? You'd walk away. I mean, why in the world would you pay $2 for a $1 bill? It's literally insane. But here's the crazy part. This exact trade is what has Wall Street's biggest players totally captivated. This isn't just some weird thought experiment. It's real.
So how did we even get here? Well, the answer starts with one company that went from being basically irrelevant to the dead center of this whole financial puzzle. We're talking about MicroStrategy.
You gotta understand, just a few years ago, back in 2020, MicroStrategy was, well, a dinosaur. They made software, their sales were slipping, and honestly, they were pretty much fading into obscurity. But then, the CEO, Michael Saylor, did something nobody saw coming. He took every single dollar the company had in its cash reserves, the safe, boring stuff, and he dumped it all into Bitcoin. At the time, Wall Street thought he was nuts, betting the entire company on magic internet money. And by doing that, they basically stumbled onto the glitch, a super powerful, self-feeding loop. So let's break down how this thing actually works. Okay, the secret ingredient here is something called convertible debt. Just think of it as a special kind of loan. The people lending the money can choose to get paid back in cash, or they can take shares of the company's stock instead. And that little choice makes all the difference. So here's the playbook. It's a simple three-step process. First, MicroStrategy borrows billions using this special convertible debt. Second, they take every last cent and buy Bitcoin. And third, because they're buying so much, the price of Bitcoin tends to go up. And since the company is now basically just a big pile of Bitcoin, its stock price shoots up too. This creates this insane loop where a higher stock price lets them borrow even more money to buy even more Bitcoin, which pushes the stock price even higher. And the result of this whole cycle? An absolutely staggering gain of over 3,000% since 2020. They've basically turned a dying company into one of the hottest stocks out there. It's like a perpetual motion machine, but it's fueled by debt and crypto. And this brings us right back to our original head-scratcher, the $1 bill selling for $2. Because when you actually look at the math, you realize it's not a metaphor. It's literally what's happening. So right now, MicroStrategy owns about $70 billion worth of Bitcoin. Simple logic would tell you the company should be worth, around $70 billion, but it's not. The stock market says the company is worth almost double that, $140 billion.
Let that sink in. Investors are knowingly paying a 100% premium. They are paying $2 for every $1 of Bitcoin the company actually has on its books. So why on earth are they doing this?
The answer, believe it or not, is good old-fashioned red tape. See, a lot of the world's biggest investors, we're talking giant pension funds, asset managers, their own rules literally stop them from buying Bitcoin directly. It's too new, too risky for their playbooks. But you know what they can buy? Regular old company stocks. And just like that, MicroStrategy becomes the perfect loophole. It's like a regulated stock market approved Bitcoin piggy bank. These huge institutions are desperate to get in on crypto, and this is the only way they can do it. And they're willing to pay a massive convenience fee for that privilege. But here's the really scary thing about glitches, right? They can be patched, or worse, they can start to run backwards. And if this particular glitch goes into reverse, the fallout could be absolutely massive. So let's be super clear about what MicroStrategy is today. It's not a software company anymore. It's a highly leveraged hedge fund that holds over 600,000 Bitcoins, all bought with borrowed money. And its so-called success has inspired a whole bunch of other companies to try the exact same risky playbook. So just imagine for a second that Bitcoin crashes. Well, MicroStrategy stock would obviously crater. And when all those convertible debt loans are due, the lenders aren't going to want worthless stock. No way. They're going to demand cash. The problem is, the company doesn't have any cash. It's all tied up in Bitcoin. So they'd be forced to sell their gigantic stash into an already collapsing market, which would, you guessed it, push the price of Bitcoin into a complete death spiral. An analyst put it in a way that just sticks with you. A forced sale of that size wouldn't just make waves, it would basically electrocute the entire crypto market. The infinite money glitch is just as powerful on the way down.
So when you take a step back and look at the whole picture, what we're really watching is a giant, high-stakes game of musical chairs. The story they're selling is all about innovation and giving investors easy access to Bitcoin. But the reality? It's a high-price leverage scheme that only works as long as Bitcoin's price goes up forever. And for now, hey, the music's still playing and everybody's dancing.
Look, maybe this all works out. Maybe Bitcoin just keeps climbing to heights we can't even imagine. Or maybe paying $2 for a $1 bill was never a genius move. Maybe it was just a very, very expensive lesson waiting to happen. The only real question is, when the music stops, who's going to be left standing without a chair?